Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's April 27th, 2012, and typically on Friday I go over all the 16 major markets that we track at PerfectStockAlert.com so that you guys know everything that I know moving into the week ahead. I'm still going to do that, but I'm going to do it later this weekend. I want to do an in-depth analysis of the NASDAQ, but if I try to put that with the other videos, it's going to be way too long and people won't watch it. So what I'm going to do instead is break it into two parts. So I'm going to do the NASDAQ today, this evening, and give you guys an in-depth analysis and let you guys learn something here. And then probably tomorrow I'll do the longer 16 major markets for the week ahead. Okay, so what I want to show you right now is, of course, the NASDAQ, and we're starting off with the current chart. It's a 3-month daily chart here. You can see that we've traded this for a while here. You had lots of success with this chart. One of the things you had back here was a nice bullish uptrend here. You got the bearish divergence formation where your momentum was trending lower, yet price was still trending higher. We were warning about that. Not a good sign. You get a pullback here, but it's the first one, meaning that if this were actually the peak, you'd still have to test this high before you would know that. So when we get the hammer candlestick formation, we say look for confirmation the next day with a higher high and a higher low from this candlestick to that candlestick. If you get that, you buy it, you put a stop right here, and then you start trailing it as she goes higher. This is the target. That's exactly what happened. We all made money. Everybody's happy. Then she keeps going to the upside. Now, there's a couple of things that we noticed here. We didn't chase it. Noticed that a lot of gaps started forming here. You had one here. You had one way down here. You have a big one here. When we got a big gap, that's more indicative of the peak is actually at hand when they get large like that. And then we start seeing another bearish divergence forming here as well. So we said, all right, we got this bearish divergence, all these gaps, nice break, big move to the upside here. Shooting star formation on this one. We short it, stop right here. We make money. Everybody's happy. We get stopped out here. She does this number, reverses. We short it again. Remember, because we pointed out this was not a hammer candlestick. You need a hammer in order to call a bottom. Here, again, no hammer. Finally, we get a hammer. So we get stopped out. We told people that at this point, some people would attempt to go on the long side, and we understood that trade. Made perfect sense to us as well, but we were not going to trade it because we don't like what we're seeing in the other markets. So we let this one pass by us. Some of you are long when you got the following day was a higher high than this candlestick and a higher low than this candlestick was confirming it. Your stop was initially here. You bought on this day. You've made money for the past 3 days. You should be advancing your stop. Everything's fine. I get what you're doing, and that makes sense, and I'm not against what you're doing. I just want to warn you of something that we're seeing here. The main item that I see here that I have a real problem with is this really monstrous gap. Here's the open. Here's the close. This is huge. Remember, whenever you get a run to the upside, it's got several gaps in it. It's not a good sign. You're getting, you're building on something that's not sustainable. Whenever you see that, anybody could say this is going to be erased, and eventually it was. That's how it works. Whenever you have a very large gap, like you had here, like you had here, and this is more telling of you're getting to the top. Okay, now you're seeing it again. So people are looking at this pullback saying, okay, this is the entry point, this is the low, this is the bottom, we're just now beginning. Well, this gap tells you otherwise. This gap is telling you that actually you're peaking. Even though you're just starting to take off, you are peaking. To really get an understanding of that, you have to kind of zoom out and look at a larger picture. So let's do that. Okay, this is a longer term chart of the same NASDAQ, and each one of these candlesticks represent a day. You can't see the individual candlesticks very well. You can go pull up your own charts to check it out, and we've also had the videos for during this time period that we talked about in the past as well. Back during this time period, well, actually before here, back there in that time period, you had the flash crash, which we called perfectly, and she fell apart when we traded it. Right here, you had intervention by the Fed, QE, whatever, and the Fed started manipulating the market, and she started going higher. However, she did it with a whole bunch of gaps, and you probably heard people talk about, yeah, he was wrong before when this is the time period they're referring to. Right here, we started shorting this, saying, no, it's got too many gaps, it's not going to be sustainable. But we didn't stop ourselves out. We just kept dollar cost averaging into it. It got really ugly. But eventually, the truth was known when the QE whatever ended, and she ends up erasing all of this that she rallied from. And all those gaps gets erased, right? That's how it always happens, okay? This is not just maybe sometimes, no, this is how it always happens. If you build on hot air, when you let the hot air out, she falls apart, okay? Let me clean that up again. whenever we see this situation here, we get a really big move to the upside here, and you can just take your trend lines and draw yourself out a trend line however you'd like. You can do it this way, you can do it a little more relaxed. You guys know there's different ways to draw your trend lines. In this case here, we said this breakdown here was the end. You were seeing the peak form. This move up here was simply a test of the previous highs, and we actually might have drawn it this way. I can't remember exactly. It might have been drawn that way. But anyway, you either had a test here or a test here. But anyway, we called this the top. It was actually the top, and the problem was it took a while to actually prove itself, and we just decided we're not going to sit here and argue with people for no reason. We just closed the website and had a nice day. I don't know how many months it was later, and the market did crash, and we realized, okay, that we were right, and we were going to just retool and bring the website back online. And this time here, we came back into the market. We had a series of, well, you can't really see it here. You had this little whiplash going on, lower lows, lower highs. Then you get a higher high and a higher low right here. At that point, we started being a buyer, right? Okay, so here we are buying, saying look for a test of this high. We get that move. Then she starts breaking out, moving higher, but she doesn't consolidate here, not substantially. She just makes a little dip and then starts moving higher. That was a warning. We said, okay, this is not something you want to chase. You don't want to be a buyer of that. Wait for an opportunity to go short. We saw a bearish divergence, which you can't see on this chart right now. And we've talked about that. We've already shown you the short-term chart. And we traded that short-term chart to the downside. Then you get a major gap here, and you're moving to the upside right now. So what I want to show you right now is that this major gap that you're seeing isn't the start of a new bull market for you. It's a peaking. You've already had this huge run to the upside here. Back here you had a huge run. Let me clean that all up. Back here, get the tools out again. You had a big move already in play. And once you get higher and higher, then your gaps get more get larger. When they're larger, they're telling you that you're getting to a top. Here, massive gap between here and here. You can go pull up your chart and zoom in for yourself to see where it's actually at. But you're seeing these major gaps form at top levels. That's what it happens. That's how it happens. Whenever you get a breakdown of the major trend line, you should already be either out of the market or seriously concerned of any long position. Well, if we draw this out, we say, what's been going on with this market? We already broken below the trend line. So what you're doing now is moving up and testing the trend line. You can do that different ways. You could draw it that way. You could draw it this way through here. Actually, you couldn't do it that way. You could do it this way. All right. There's different ways you could draw that, but all of them tell you the same thing. The trend has broken. Now you're jumping up to simply test it like you did back here. All right. You broke it, and then you ran up here and tested that trend line, and then you find resistance at it. Remember, support broken becomes resistance, then you start to fall away from it. So there's a lot of negative that I see in this market. I don't want to be a buyer of it. And if you are a buyer of it, you should keep a tight stop. Now, where did I get this extreme fear or respect for gaps? Let me show you where I got that. Back in 2007 and for years before that, all you had to do in the market was buy the dip. That was about all you took. And then one day we're trading along the market, and I start to notice something, and we, of course, we're actually bullish at this time period here. We started to notice that there was a lot of gaps forming just all over the place. It was like a regular occurrence just to find gaps just happen all over the place. And I've marked some of them on this chart for you guys to see. There's about 7 of them right there. But it was actually the peak. It was the first time I ever noticed a large amount of gap activity to this degree in a particular run like that. Whenever you see that, you're starting to get a problem. But I didn't actually realize that at the time. Even though I did realize before it was too late and the market started to crash, I didn't realize that was something that you typically see in market peaks. And so I started analyzing it and going back and looking at past data. But again, you'll notice major, once the gaps get really large, that's the top. Okay, when there's smaller gaps like you have here, they're smaller, it's not quite there yet. So whenever you're starting to see the really big gaps forming, then you know that you've got a real problem on your hands. Okay, so this is something I want you guys to go back, do your own research. It's not, don't just take my word for it. Do your own research. But everything I know and everything I have ever done based on market analysis, and whenever you get a series of gaps like you're seeing here in the markets, it's time to get out. Looking again at the NASDAQ short-term chart, the 3-month chart, I want to ask you a few questions. Number one, what do we know? We know that this is not the start of a rally here. This is actually on the longer-term chart. We're seeing a major move to the upside. We've already been in for a couple of months now, and we're not expecting this to go on for forever. So Are we still in an uptrend? No, we've already shown you the trend line is broken, so we're bouncing, but it's not something that we can reestablish a trend line on. And then finally, what do the large gaps mean? Well, it means the same thing I'm showing you on all the other charts. It means you're peaking, you're getting to a major top. Now, with all that information in front of you, even though you may be long, maybe making money on this, what you need to think about is what's driving the market higher. You have earnings. Well, that's not going to go on for forever. At some point, earnings will end. That's why you get to the old saying, sell in May and stay away. Then you have the situation where you have the end of Operation Twist is coming in the middle of summer. And if you watched the news last night, you know about Spain's downgrade of debt and how that affected their bond yields, and also how you're seeing that affect Germany at the same time and their bond yields. So all of that is a perfect picture of a disaster waiting to happen. And I really would caution anybody who's long this market at any degree to think about that. Ask yourself why you're really long. Just because the market's going up, a lot of guys get fooled that way. Don't do it. Have a reason, have a plan. Even if you disagree with mine, come up with your own. But have it include a scenario where the market goes down and goes down substantially. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. There are many videos on our website in the tutorial section in video format teaching different aspects of technical analysis, including gap analysis, trend lines, so forth and so on. So if there's anything in this video that you didn't understand, you can go there and check them out. They're all free. All we ask in return, refer a friend, share our videos online, etc., etc. Enjoy your weekend. I will put out that other video later this weekend, so you guys will get full analysis on all the other major market charts that we track there. I want to thank you guys for your time, and enjoy your weekend. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.